Welcome back, everybody, to another deep dive. Today, we're going to be looking at something that I'm calling crypto science. You know, that fusion of blockchain technology with traditional finance, and specifically, we're going to be talking about Davos 2025 and how real-world asset tokenization has really taken center stage. So think about this. What if owning a piece of like a skyscraper or a famous painting was just as simple as trading cryptocurrency? That's the potential that we're talking about here.
Yeah, and I think what was really fascinating about Davos 2025 is that it really felt like a turning point. It wasn't just tech enthusiasts talking about this anymore. We saw major players like BlackRock and BNY Mellon acknowledging, that tokenization is here, and it's something that has the potential to really reshape finance.
Yeah, it really did feel like a shift in mindset. You know, these are institutions that manage trillions of dollars in assets. They're not just going to jump on some passing fad.
Right. And to really understand the weight of that shift, I think it's helpful to understand a little bit more about who these players are. So BlackRock, for example, it's not just some investment firm. They have immense influence on global markets. They're shaping investment strategies for everyone, from pension funds to individual investors. So that their CEO, Larry Fink, calls for the SEC to expedite the tokenization of bonds and stocks. It sends shockwaves through the entire financial world.
Yeah, it's almost like they're setting the stage for a new era of finance, one where, these traditionally illiquid assets become much more accessible and tradable. But maybe we should take a step back for a second and just explain what exactly we mean when we say real-world asset tokenization.
Absolutely. So in simple terms, imagine taking something like a house, a painting, or even company stock, and turning it into digital tokens on a blockchain. Each of those tokens represents a fraction of ownership in that underlying asset.
So instead of selling your entire house, you could theoretically sell a portion of it through these tokens.
Precisely. And because these tokens are digital, they can be traded much more easily and efficiently than traditional assets, potentially opening up a whole new world of investment opportunities for people who might not have had access before.
And it's not just hypothetical. Stellar, a leading blockchain network, has already tokenized over $400 billion in real-world assets. It's proof that the technology is ready for prime time.
Yeah, Stellar's success is a great example of how tokenization can work in practice. But there's another key player here that we haven't talked about yet, and that's the World Economic Forum, or WEF.
Ah, yes, the WEF. They seem to be everywhere at Davos.
Yeah.
And they dedicated a significant amount of time to discussing tokenization. But for those who might not be as familiar, can you give us a little background on who they are and why their voice carries so much weight?
Sure. So the WEF is an international non-governmental organization that convenes these massive annual meetings in Davos, Switzerland. They bring together world leaders, top CEOs and thinkers from all sorts of different fields to discuss global issues and trends. So it's kind of like a giant brainstorming session for the world's elite that aims to shape global agendas and influence policy.
So when the WEF starts talking about something like tokenization, people pay attention.
Absolutely. And they're not just talking about it, they're actively involved. They've launched initiatives, they've created working groups, they're publishing reports, they're even developing frameworks for how blockchain and tokenization can be used to address global challenges. So their involvement really signifies that they see this as a potential force for positive change in the global economy, not just a fleeting trend.
It's interesting how you have BlackRock, this financial powerhouse pushing for tokenization from a market perspective, and then the WEF, this global think tank exploring its potential to address broader societal issues. It's a fascinating convergence.
Yeah, it really highlights the multifaceted nature of this technology. It's not just about making money, it's about creating new possibilities and finding innovative solutions to complex problems.
And speaking of which, the SEC, the U.S. Securities and Exchange Commission, has also stepped into the arena. They've formed a dedicated crypto task force to create a clearer regulatory pathway for digital assets.
Yeah, this is huge because regulatory uncertainty has been one of the biggest roadblocks for wider crypto adoption. So having a clear framework from the SEC could be a game changer.
And to make things even more interesting, they put Commissioner Hester Pierce, a known advocate for crypto, in charge of the task force. So this suggests that the SEC might be moving toward a more open regulatory approach.
Yeah, it's definitely a move worth watching closely. While some people are applauding the SEC for taking a proactive stance, others are worried that a rushed approach could compromise investor safety.
So we've got a lot of moving pieces here. You've got major financial players embracing tokenization, global organizations exploring its potential, and regulators scrambling to create a framework for this rapidly evolving space.
Right, and in the midst of all of this, it's easy to lose sight of the individual. So let's bring it back to you, our listener. How could this whole RWA tokenization thing actually impact your life?
That's the million-dollar question, isn't it?
Well, imagine being able to easily invest in things
Yeah.
that were previously out of reach for most people. Things like a piece of a famous painting or a share of a high-value commercial property.
Fractional ownership. That's the real game changer here.
Exactly. And it's not just about access. Tokenization could also lead to more efficient and transparent market, potentially lowering costs and simplifying investment management for everyday people. But of course, it's not all sunshine and rainbows. There are some potential downsides to consider as well.
Like what?
Well, for starters, there are still those regulatory hurdles we mentioned. Until we have a clear and consistent framework, there's always going to be a degree of uncertainty and risk.
Yeah, and we can't forget about security concerns. Anytime you're dealing with digital assets, there's always the potential for hacking, fraud, and other vulnerabilities.
Right.
So how do we mitigate these risks? Is it just a matter of waiting for regulators to catch up and for the technology to mature?
Well, that's part of it, certainly. But it also requires a proactive approach from everybody involved. Developers, businesses, investors, and regulators alike.
What do you mean by a proactive approach?
Well, on the development side, it means building secure and robust platforms that are designed to resist attacks. On the business side, it means implementing strong security protocols and educating employees about best practices for handling digital assets.
And on the investor side, it means doing your due diligence, understanding the risks involved,
Yeah.
and not investing more than you can afford to lose.
Exactly. And for regulators, it means creating a framework that encourages innovation, while also protecting investors from fraud and manipulation. It's a delicate balancing act, but it's one that's essential for the long-term success of this technology.
Yeah, it sounds like we're still in the early innings of this tokenization game. There's a lot of potential, but there are also a lot of challenges to overcome.
Absolutely. It's a dynamic and rapidly evolving space. But I think the key takeaway is that this is not just a technological shift, it's a cultural shift as well. We're fundamentally changing the way we think about ownership value and trust.
And that's a conversation that's worth having. So as we move into the next part of our deep dive, we'll explore some of the broader implications of this shift. What does the future of tokenization hold? And what does it mean for society as a whole? Stay with us.
Welcome back to our deep dive. As we've been talking about this tokenization of real-world assets, it just strikes me how much potential there is here to unlock value that's currently trapped in these really illiquid markets.
Yeah, that's a great point. We often take for granted how difficult it is and time-consuming it can be to actually buy or sell certain assets. Imagine trying to sell a piece of commercial real estate quickly. It's not exactly as simple as clicking a button.
Exactly, and that's where tokenization comes in. By representing those assets as digital tokens on a blockchain, we can streamline that entire process, make it faster, cheaper, and more accessible to a much wider range of people.
So it's not just about making rich people richer. It's about creating new opportunities for everybody.
Precisely. So let's say you're a small business owner and you need to raise some capital to expand. Traditionally, you might have limited options, maybe a bank loan, or trying to attract venture capital. Both of those can be time-consuming and challenging processes.
Not to mention expensive with all the fees and interest payments.
Right. But with tokenization, that business owner could potentially issue digital tokens that represent shares in their company. And those tokens could then be traded on a blockchain-based platform, which makes it much easier for investors to buy and sell them.
That's like crowdfunding on steroids.
In a way, yeah, it allows businesses to tap into this global pool of capital without having to jump through all the hoops of traditional fundraising.
And it's not just limited to businesses, right? We talked about real estate earlier, but let's dig into that a little bit more. How could tokenization actually change the way we buy and sell property?
Well, imagine you want to invest in real estate, but you don't have hundreds of thousands of dollars lying around for a down payment on an entire building. With tokenization, you could potentially buy tokens that represent a small fraction of ownership in that property.
So instead of buying the whole pie, you're buying a slice.
Exactly. It allows for that fractional ownership, which opens up real estate investment to a much broader range of people.
And because everything's recorded on the blockchain, it would make the whole process more transparent and secure too, wouldn't it?
Absolutely. So all those transactions would be publicly auditable, which reduces the potential for fraud and manipulation. And because those blockchain transactions are typically much faster than traditional methods, you could potentially see settlements happening in hours or days, rather than weeks or months.
That's pretty incredible when you think about all the paperwork and back and forth that's involved in a typical real estate transaction. Sounds like tokenization could really streamline things.
It certainly has the potential to, and, those same principles can be applied to other asset classes as well. We talked about art, but you could also imagine tokenizing things like intellectual property commodities, renewable energy credits. The possibilities are really quite vast.
It's almost like we're on the verge of this whole new financial ecosystem, where the traditional boundaries between those different asset classes start to blur.
That's a great way to put it. We're really moving towards a world where ownership and value can be represented and traded in a much more fluid and dynamic way.
But as with any major technological shift, there are bound to be some bumps in the road. So what are some of the challenges that we need to be aware of as tokenization becomes more widespread?
Well, as we mentioned earlier, that regulatory uncertainty is still a major hurdle. Governments and regulatory bodies around the world are still trying to figure out how to best approach this new technology.
It's like the Wild West out there.
In some ways, yeah. And that lack of clear guidelines can make it difficult for businesses and investors to operate with confidence.
And then there are those security concerns, right?
Yep.
I mean, blockchain technology is generally considered very secure. But as with any digital system, there are always vulnerabilities that could be exploited.
Right. We've already seen some pretty high-profile examples of hacks and thefts in the cryptocurrency world. And those same risks apply to tokenized assets as well.
So how do we mitigate those risks? Is it just a matter of waiting for regulators to catch up and for the technology to mature?
Well, that's part of it for sure. But it also requires that proactive approach from everyone involved: developers, businesses, investors, and regulators.
What do you mean by a proactive approach?
Well, on the development side, it means building really secure and robust platforms that are designed to resist attacks. On the business side, it means implementing strong security protocols and educating employees about best practices for handling those digital assets.
And on the investor side, it means doing your due diligence, understanding the risks that are involved, and not investing more than you can afford to lose.
Exactly. And for regulators, it means creating that framework that encourages innovation, but also protects investors from fraud and manipulation. It's a delicate balancing act, but it's one that's essential for the long-term success of this technology.
Yeah, it sounds like we're still in the early innings of this tokenization game. There's a lot of potential,
Yeah,
but a lot of challenges to overcome.
absolutely. It's a dynamic and rapidly evolving space, but I think the key takeaway here is that this is not just a technological shift, it's a cultural shift as well. We're really fundamentally changing the way we think about ownership, value, and trust.
That's a conversation that's worth having. So as we move into the final part of our deep dive, let's explore some of the broader implications of this shift. What does the future of tokenization hold? And what does it mean for society as a whole? Stay with us. Welcome back to the deep dive. It's amazing how we've gone from the halls of Davos to the nuts and bolts of blockchain, and now to what this all means for, everyday people.
Yeah, it really is a testament to just how far-reaching this whole crypto science thing really is. Tokenization isn't just some Wall Street phenomenon. It has the potential to really reshape the financial landscape for everyone.
We talked about fractional ownership before, and I think that's a concept that's really worth digging into a bit further.
Yeah.
What are some of the real-world applications that you think could benefit from this kind of approach?
Well, think about something like renewable energy. Imagine if you could invest in a solar farm or a wind turbine project, even if you couldn't afford to fund the entire thing yourself. Tokenization could make that a reality. It would allow individuals to pool their resources and support these kinds of sustainable initiatives.
So you're not just buying a token. You're buying into, a vision of a greener future.
Exactly. And that same principle could be applied to other areas as well, like affordable housing projects, community development initiatives, even funding for scientific research. Tokenization could really democratize access to these kinds of opportunities. It would allow people to invest in projects that they believe in, even if they don't have vast sums of money to throw around.
It's almost like we're talking about a new form of impact investing.
Yeah.
Where people can align their financial decisions with their values.
Yeah, that's a great way to put it. And it's not just limited to developed economies either. Think about the potential impact in emerging markets where access to traditional financial services is often very limited.
That's a really fascinating point. How could tokenization help to bridge that gap?
Well, imagine a small business owner in a developing country who needs to secure a loan to expand their operations. Traditional banks might be hesitant to lend to them because they lack a credit history or collateral. But with tokenization, that entrepreneur could potentially access a global pool of capital, bypassing those traditional barriers.
So we're talking about like a new form of financial inclusion almost, powered by blockchain technology.
Exactly. And it's not just about access to capital either. Tokenization could also help streamline things like cross-border payments, making it easier and cheaper for people to send and receive money across international borders. This could be huge for things like migrant workers who send remittances back home, or businesses that operate in multiple countries.
So we're talking about a technology that could potentially empower individuals,
Mm.
boost small businesses, and even drive economic growth on a global scale. Pretty remarkable when you think about it.
It is. But it's important to remember that with any new technology, there are potential downsides as well. We've already touched on some of them: regulatory uncertainty, security risks, the need for investor education. But there's another aspect I think we should consider, and that's the potential for tokenization to actually exacerbate existing inequalities.
That's an important point. How could that happen?
Well, if access to these new investment opportunities and financial services is primarily limited to those who are already wealthy and tech-savvy, it could end up further widening the gap between the haves and the have-nots.
So it's crucial that we ensure equitable access to these technologies and that the benefits are shared widely.
Absolutely. We need to be mindful of those potential unintended consequences and
Sure.
work to create a system that's fair and inclusive for everyone.
Yeah, it sounds like there's a lot of work to be done, both on the technological front and on the social and ethical front, to really make sure that tokenization lives up to its full potential.
I completely agree. This isn't just about building cool new tech. It's about using that tech to create a better world for everyone, and that requires careful consideration, collaboration, and a commitment to ethical principles.
So as we kind of wrap up this deep dive, what's the key takeaway you want our listeners to leave with?
I think the most important thing to remember is that we're still in the early stages of this journey. Tokenization is a powerful tool with the potential to really revolutionize finance, but it's up to all of us to shape how that revolution
It's
unfolds.
not a predetermined outcome. It's an ongoing conversation.
Exactly. And the more informed we are, the better equipped we'll be to participate in that conversation and make sure that tokenization is used for good.
Well, this has been a fascinating exploration of crypto science, from the excitement of Davos 2025 to the practical implications for individuals and the broader ethical considerations. We've covered a lot of ground, but this is really just the beginning of the conversation.
I encourage you to continue exploring this space. Ask questions, challenge assumptions, and engage in thoughtful dialogue. The future of finance is being written right now, and we all have a role to play in shaping it.
Thank you for joining us on this deep dive into the world of crypto science. We hope you found it insightful and thought-provoking. And until next time, keep learning, keep exploring, and keep asking those tough questions.